So CPI just came out. We're looking at a red day here. I'm personally not impressed very much by the CPI numbers that we just saw, and we'll briefly get into that in a second here. But all hope is not lost because we do have one more CPI coming out before the next Fed meeting. Year over year, we're at a 6.4% inflation. Less food and energy, we're at 5.6%. Rising shelter costs actually accounted for half the monthly increase and actually accounts for more than 1/3 of the index, rose 0.7% on the month and was up 7.9% from a year ago. Energy and food costs was also a contributing factor, rising as well. Now, I personally think that we may see the Fed raise their target rate from 5 to around 6%, meaning that we're going to see a couple more rate hikes, more than already expected. I think the market already sees us at least raising rates 2 more times. I think it could be as many as 4 to 5 more times as we get closer to 2% inflation. Inflation is turning out to be very sticky, and despite all the Fed's effort, we're still seeing inflation rise a little bit, at least in a few specific sectors. And as said here by Dallas Fed President Lori Logan, we must remain prepared to continue rate increases for a longer period than previously anticipated, if such a path is necessary to respond to changes in the economic outlook or to offset any undesired easing in conditions. So this is definitely not what the Fed wants to see, but we do have redemption with another CPI coming out before the next Fed meeting, and that one will be more fresh on everybody's minds, so hopefully that can redeem us here. But I did want to bring up the SPY here, and then I'm going to bring up a small cap semiconductor stock that's my absolute favorite. It's Indy Semiconductors, and they actually just got a analyst buy rating, and it's causing it to go up 10 or 11% here in the market today, but we're going to look at that in a second. Looking at the SPY, we did break our long-term downtrend, and I showed you guys this yesterday. Keep an eye on this area, make sure we don't break 400, but it is very positive to see us finally break out of this descending resistance. And we got another buy rating here for Indy Semiconductor. Now, if you're unfamiliar with this company, I'll leave you a link down below to my previous Indy video. But by the way, they do have earnings coming out here on Thursday. So if you're looking to FOMO in, I would be a little cautious, but we do have a $15 12-month forecast representing a 64.3% upside. And we just had Craig Ellis here. And if you're familiar with my channel, I've actually mentioned Craig Ellis before. He has given ratings to Indy before. Unfortunately, many of them were unsuccessful. Regardless, he is a 5-star analyst, and he's rating it as a $13 price target. And while 0 out of his 5 ratings were profitable on Indy, although you could argue, if you got out at the right time, some of them actually were. But regardless of that, he has an average return of 19.7%, beating the market, and a 58% success rate. He is rated 87, number 87 out of 8,300 Wall Street analysts, with that 5-star rating. But we did just see on the 13th, on February 13th, that he did upgrade it to a buy with the $13 price target, but take it for what you will, because he, according to TipRanks, hasn't been correct with Indy at least. Now, going over Indy's chart, you'll see that we've been in this what I would call a long accumulation phase. It really hasn't broken much lower than its May 11 low. You'll see that there. Here's its May 11 low, and since then it has been, just in this sideways action with a little bit of uptrends along the way. Right now we are reaching a resistance point here in the 9s. I personally think we can very likely pull back coming up to earnings with a little bit of fear. The RSI is becoming overbought, but looking at Indy as a long-term stock, I do think it's still a buy where it's at, despite it running up. I would be cautious though, look for a pullback. I mean, it is up something like 11% today. And like I said, we do have earnings coming up. Definitely could cause a little bit of uncertainty coming up to earnings. Earnings could come out and, surprise us in a negative way with some lackluster numbers. But one thing we are seeing here is they are tightening up their EPS, still negative, but getting better. And looking at the revenue, they do have expected a record-breaking quarter. Over $30 million in revenue, when this company in 2021 was pulling in less than $10 million in revenue. Now, I definitely believe in Indy Semiconductor for the long term, and if you're interested in them, like I said, I'll leave you guys a link down below to one of my previous Indy videos. But let me know what you think about CPI. I'm not all that impressed, and it seems like Wall Street isn't either. But we do have one more to look forward to before the Fed meeting. Hopefully that one sets a good tone for the next Fed meeting, but only time will tell. Thanks as always, guys, for watching. Have a good day.